Shares of Pizza have been sliding today as investors digest the new earnings report. Despite challenging economic conditions, Pizza did see positive sales growth and is anticipating a 2 to 3% expansion of its restaurant network in 2025. Paul Goddard is with us. He's Chief Executive Officer of Pizza. He's going to help us break this all down. Thanks for coming in today.
Thanks for having me again, Marilla.
Okay, so you had same-store sales up 1.7% last year, right. First quarter.
Q1 24.
1.2% now. So slower growth. How are you reading this?
Yeah, slower growth, but it's positive on positive, and we're quite encouraged in this environment. Last year, the rest of the year was actually a little bit weaker, and we've really shown some great momentum, turning it around since, I'd say, the end of Q4 last year. So we feel actually quite confident that our marketing's resonating, our value messaging, our tech platform, our convenience, all those things bundled together as part of our Everyone Deserves Pizza sort of overarching theme is really resonating. And so I think we really like the momentum. And I mean, we're certainly concerned about the macro consumer environment. We know consumers are hurting, and there's obviously lots of uncertainty geopolitically and whatnot. But I think we've really got spring in our stride. We would want to see even bigger numbers, but we've been quite happy. And so we are actually quite confident that we can keep positive, and we're going to do our best to keep innovating. And I think we're always doing that. We're always modernizing our restaurants. We're bringing in new franchisees, growing new restaurants. And so the pace of the network growth has been good. The franchisee pipeline is strong. The mood is good in that group. So I think we're feeling like consumers are happy. And above all, for us, I mean, traffic and ticket are up. And that's hard to do. Usually you might get one or the other. Yep. Traffic is our number one. We want more volume, more transactions. It shows people really do like what they're seeing and the value they're getting, yep. Especially in this tough environment and when people are finding affordability issues. So traffic being up and ticket, it seems to be the tightrope that we've been walking, and it seems like we're striking that quite well, because it's roughly balanced, the amount of the sort of traffic increase and ticket increase.
Okay. How are you managing costs, considering we have a tariff war? We have Canadians now sort of deciding, as you said, what to spend their money on. So any increase in costs might send them back out the door. How are you managing that?
Correct. It's very delicate. And I think we're always focused on cost. I mean, for us, we look at the food cost basket for our franchisees and our suppliers. We have very good buying power, scalability. So we try and hold the line as best we can. We've got some long-term relationships with certain suppliers, but we also do a lot of RFPs, and we'll change out suppliers when we need to, because we've got to get the value as long as the quality's there. And then we make sure we can pass that on to franchisees and in turn consumers. So we've held the line quite well. Inflation actually has at least a little more reasonable now than it used to be, but you're right, now you have the tariff risk. So at least for us, most of our ingredients are Canadian. Almost all of our food is Canadian. We actually get our tomato sauce from California, freshly vine-ripened tomatoes from California. Those do cost us more, but even without tariffs, I mean. And it looks like we may even be able to get them in without tariffs potentially. So we're hoping that's the case. But most of our other food cost items are all in Canada anyway, so we're a 100% local, Canadian company. We came from Toronto, and it's in this environment especially, it's nice to have some Canadian food input costs.
Are you preparing for a worst-case scenario? We are seeing the markets bounce back a bit. We've seen some of the tariff threats die down.
Right.
So I think last time we spoke, you were probably sort of looking at it differently than you are now.
Yes.
What are you looking at now, and how are you preparing for the rest of the year?
I think what we expect, and probably we're not alone in this, is just a lot more uncertainty and volatility. And so we find we can't be sort of too knee-jerk happy with one announcement and then suddenly policy swings another way, or another, the tariffs go up, they go down. There might be a trade deal with Canada maybe in 6 months, or maybe there won't be one. Who knows? So there's a lot of different bargaining going on between all the countries and among all the countries, and certainly Canada, the U.S. So I think we're just trying to keep our food costs reasonable, our rents for our franchisees, manage our labor very well too. We try and have variable revenue with the variable cost for our labor when it's busy in the restaurant. Have people when you don't. So we know the main ingredients at the store level, and we want to make sure that they have positive cash flow. And then for us in the Royalty Corp, we want top-line sales growth and network growth. So as long as we're fundamentally having really efficient restaurants, lots of traffic, customers see that prices are stable, we can get some checks. Sometimes we need to take ticket price up. But for our main value offerings, we're careful about how we do that. So we might say, well, let's hold the price, or maybe let's even decrease the price, but let's try and bundle it with some side items. And we have examples of that. We launched something called Tater Tots, which is kind of a fun side product, and that's had massive take-up. It was an innovative product. It's highly profitable for our franchisees. And when people ordered that, the average check size for that order went up 50%. So you get great take-up. Not everyone gets those tater tots, but those that say, I'm getting a value, an XXL pizza, biggest pizza on the market, 18-inch pizza for $19.99, if they'd like, they can also get tater tots on the side. But someone might say, I only have a $20 budget, and that's fine. We'll still get the order, but we'll also get the bigger order from those that say, I want an add-on. So we're trying to sort of bundle intelligently, complement various offerings with things like that.
Since you are so focused on keeping costs down for people, considering the uncertainty, as you mentioned, is it the right time to keep expanding?
I certainly think it is. I think we have lots of opportunity in Canada. We've expanded most recently, most aggressively in Quebec, where we now have, I think it's 65 restaurants, and we've got something like 40 in British Columbia. So we are really national coast to coast. We're in St. John's, Newfoundland. We're going to do more there. But our biggest core markets are still Ontario, where we have originated from, Toronto, Ontario, and beyond. And the Ottawa area is also big. Alberta is then our second biggest province outside of Ontario, and we have distribution facilities there. So although we have the highest population of restaurants there, we think we can even grow more in Alberta and Ontario especially. Just this quarter, we grew 3 more restaurants in Ontario, even though many people say it's a mature market for us. Well, it largely is, but there's still a lot of opportunity there, and we can do very well in those markets. So we think there's opportunity there, and also, although it's very early days, in places like Mexico and maybe other markets as well.
How many do you have in Mexico at this point?
We have 4 there, and 5 or 6 on slate to come out hopefully later this year. We're very happy with the early signs there.
Okay. Great
Partners, so that's exciting as well. Canada and the beginning of international.
Got it. Paul Goddard, I do have to leave it there. We're out of time with you, but thank you for coming in. I appreciate that. Paul, of course, is the Chief Executive Officer at Pizza Pizza. Coming up